Hey, this is Keith with Liftoff. I have a really fun, exciting guest for you today. I mean, look, this is all talk about the startup ecosystem. We're talking about founders. And one thing we know is founders know how to start. Fewer know how to scale. Almost none know how to finish.
Mhm.
Today's guest did build a global economy company to 200 employees, 12 countries, and sold it for a nice chunk of change. I think it was like $4 billion to a competitor. He also competed in 17 Ironman triathlons and summited Everest. So, is that not a goal-oriented, heat-seeking startup founder leader? Yep.
I,
Stephen Pivnik, my guest today, doesn't separate endurance from leadership. He builds companies the way he climbs mountains, intentionally, systematically, and with the finish line in mind. The startup journey is about discipline and exits and what it takes to finish strong. Stephen Pivnik, welcome to the Liftoff.
Keith, thank you so much for having me. I love that introduction. That's fantastic. Thank you.
Oh, listen, I like your story, man. It's sort of analogous. I kept thinking, look, my show's called Liftoff. It's the startup journey. We love talking about what it takes to be a founder and the comparison to climbing Everest or running triathlons is a good representation, is it not?
Oh, absolutely. I mean, I'm a firm believer that entrepreneurship is an endurance sport, and endurance sports just have so many similarities to entrepreneurship, and I'm happy to share all of them and go into details.
Well, let's go into some details. What started first, the athlete or the entrepreneur?
The entrepreneur started first for sure. I got bitten by the entrepreneurial bug early on because I think I inherited it from my father. And then my midlife crisis when I turned 40 is when
Oh,
I picked up endurance sports and became addicted to those.
wow, you picked an interesting time to go pick up. 40 is when my knees started to crack.
And now I'm just living proof that it's never too late. Yeah, I mean, I wish I hadn't started endurance sports earlier? Of course. I mean, I would have been much more competitive than I am now, meaning I would have placed
Sure.
higher. But
I get it.
I don't care. I enjoy the preparation for these events, and I enjoy participating in these events, and my finishing time and place don't matter.
Awesome. I love that approach as well. Now, of course, entrepreneurship, it does matter how we finish. And you had an excellent finish. Give us a little bit of the backstory.
Sure. So yeah, it's funny. I actually wrote a book called Built to Finish. So the entire story is available in my book. But the backstory is I started a computer consulting company back in the early 90s. This is when there was a huge need for application development expertise, just like we all have apps on our phones right now. Well, back
Hmm.
in the day, there weren't applications that companies could buy. If a business needed to automate a business process, they would hire consultants like us to write these applications from scratch for them. So we started writing applications. An application that we wrote, which was really, really niche and unique for a large bank, turned into a line of software products for us. And then we ballooned that little custom application development project into a suite of software products. And we became an internationally well-known software company, like you mentioned, which we expanded to have employees in 12 states, service, I'm sorry, 12 countries. 35 states in the US and service the 90% of the global 5,000 customer base.
Wow. So a lot of this was I'm going to build and build to last. But did you have a exit in mind? Did you have a thought about how you were going to finish?
I wish I was as smart then as I am now. And a lot of advice I love to give is, build now with the end in mind. I
Mhm.
definitely did not build with the end in mind.
Big.
I built because I thought it would be a better career choice for me. It would be more beneficial for me financially and for me and my family. And I felt that we can make a difference in the markets that we served.
So with that comment, it leads me to think, well, what if you were to start it today? How much of it would you build with the end in mind versus just recommending, hey, build to do the best you can each day, each month, each quarter?
Yeah, there's nothing wrong with with the latter of what you just said. We call them, lifestyle companies. There's absolutely
Yeah.
nothing wrong with building without an end in mind. Just building to, service customers, have an impact, to the marketplace and to run it for years and if not generations. That's definitely a strategy.
Yeah.
Or You can build it with the end in mind and know exactly, what revenue size you want to get to, who your potential acquirers are, whether they be strategic or financial in the future, and do all the necessary things from the very get-go in order to, maximize that exit at the end.
Yeah, beautiful. Okay, so you've scaled to 200 employees, 12 countries. What breaks first in companies that scale fast?
Oh my God, people break first, and you
Yeah.
quickly outgrow the individuals that you've started with, and eventually you'll outgrow yourself, which definitely happened to me. It took me a long time to realize that there's
Yeah.
somebody that I'm better served, that my business is better served by having a professional CEO run it. I'm not taking any credit away from what I built and the progress
Yeah.
that me and the company made, but there came a time, and for me, it took forever because I was really young. By the time the company was about 24, 20, yeah, about 23, 24 years old, I said, you know what? To my answer earlier, I'm breaking, and this company is going to be
Was
better
that
served.
your realization or your partner's realization, or did your company shake you up one day and say, hey,
So I had brought on a group of advisors called Accresis, and their recommendation to me, part of many recommendations, was to look at the executive team and to make sure I was surrounded by the right people on my
yes,
senior leadership team, right?
yes,
So we went through individuals almost on a role by role basis, and we some people we were able to to move around the company, others we had to part ways with and bring on some professional leadership in that specific area. That's inevitable. That's going to happen on everybody's journey. And during that process, I finally looked in the mirror and I said, well, if I did, if I felt that I needed a different talent in this specific role, maybe
yeah.
I should consider going through that process with me personally. And I did.
That's modest of you. Now, look, I mean, founders are can be brittle. As tough as they are on the outside, they can be brittle on the inside. I find there's a way they can sabotage themselves
Yes.
and
A lot.
during scale, right? So there's emotional issues, there's business issues. How do you find that?
Yeah, I mean, I think a lot of founders, myself included, are really their identity is wrapped up in their business, right?
Yes.
They really can't separate their identity from being the leader and the founder and the CEO of what they started. And that's fine. But I'm saying, there's some limits to that. Not in all cases. There's plenty of examples where a founder has taken a company from zero, knowing as little as I did when I started mine, to over $100 million, if not $1 billion in revenue. That can definitely happen. But when you realize that there's a possibility for the company to be in better hands, that's something that's, worth pursuing. And if you find the right person, then you go down that route, or you may come to the realization, you know what, I tried. I'm still the best person to run this company. And that's great too.
These personnel challenges are never ending. What's the Ironman equivalent to scaling a company, Stephen?
The Ironman equivalent, I guess, getting to the world championship, right? Because it's first of all, I mean, an Ironman race in and of itself is an incredibly complex endeavor to go after. It's a
Right.
ridiculously long distance of swimming, biking, and running. 2.4 mile swim, 112-mile bike, followed by a full-blown marathon with a 17, hour, cutoff to do all those three things,
Right.
right? So there's planning, there's preparation, there's execution, there's pivots during a race, there's setbacks during a race. And all of those things that I just mentioned are 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 elements of entrepreneurship as well. You need to plan, you need to prepare, you need to pivot,
Yes.
you need to deal with setbacks. There's going to be times where you're banging your head against the wall and you're going to want to quit. I've had that moment in both sports and in running my company. And that's why I love comparing the two because they feed on each other.
Right. What's the equivalent to finishing strong in business and in, maybe your personal example?
Yeah, I mean, finishing strong in business is finally, realizing the value of what you created. I mean, a lot of entrepreneurs put in a ton of blood, sweat, and tears into their business, and they find themselves, in 10 years or in 15 years that they have 90%, if not 100% of their net worth tied up in this illiquid asset called their company, right? So
Yeah.
finishing strong, in my opinion, is finally realizing that you want your family, yourself, and the stakeholders in the company to benefit from all these hard years of effort via a strategic exit or an investor majority recapitalization. So obviously in a race, you want to get to the finish line. If you have a certain, place in mind, you want to be on the podium for second or third, great, go for that. Or sometimes, like in my case, I just want to finish because I do these events just so I can participate, stay super, super healthy, and train to get there, finish strong so that I can walk home without being, carried in a wheelchair, which happens to some.
Yeah. So I mean, this is kind of an interesting thought we were discussing here. When's the right time to think about an exit? Now, I'm going at it from the standpoint of, okay, I'm done with this, to two, I have people knocking on my door offering me insane amounts of money that gives me, generational wealth. Or three, man, it's all crumbling down. I got to get out of here before it all falls off on me. And all of those scenarios can be true. I'm not sure they can be true at the same time. Maybe they can. But what are your thoughts about when's the right time to be thinking about these things?
Yeah, the right time is different for everybody. And obviously there's a huge financial component, which I'm a strong believer in, that needs to be evaluated um, uh, many, many times. And we can pick a time frame in the business. A 5-year mark is a good time to
Right.
start. Definitely by the 10-year mark, where you need to kind of realize from a financial perspective what is the right number for me
Yeah.
personally, right?
Yeah.
I mean, everybody wants that unicorn $1 billion valuation, but very few people are going to get that.
Right.
But the right number is easy to calculate, and there's multiple methodologies to utilize. Like in my case, I said, you know what? If I can sustain the lifestyle that I have right now after 26 years of running my business, then I'll be happy. So we
Oh,
went through
okay.
we went through this calculation. It's called a proceeds waterfall. It's a pretty sophisticated spreadsheet where you start at the end, right? How much money do I need after everybody's paid? All the equity holders, all the stock option holders, the lawyers, accountants, Uncle Sam, state and local taxes, et cetera, et cetera, et cetera.
Yeah.
What's that bottom line number that I need if invested conservatively without a significant amount of risk that'll throw off enough cash flow for me to have my current lifestyle? So then you work your way back, you work your way backwards from that. So to get that number, what does
Yeah.
my enterprise value or sales price need to be? And then you talk with investment bankers and you figure out, well, is my company, worth that money today, or is there a gap? And then you put together a plan on how to fill that gap.
How did anything shock you during that process, the exiting process?
Oh my God, there was a lot of surprises. The amount of taxes that needed to be paid
Oh yeah.
surprised me.
Yeah.
One of my biggest advice to entrepreneurs that are building companies right now is to start tax planning and estate planning way ahead of the exit. If you think, my exit's not it's not till 5 years from now, 5 years will go by in a blink, and there's a lot of tax strategies that you could put into place that are necessary to be put in way ahead of the actual exit event.
Yeah,
Be-
and just to
uh,
double click on that, Stephen, give me an example because I know because I've started a few myself. There are times you want to take your options and pay for them early. What are some of the things that you found as just helpful to hints?
Sure. There's a lot of QSB QSB type of offerings are available. Moving shares of your company into much more tax friendlier states from the state that you may be incorporated in. Those are all processes that can be done and are 100% legal as
Starting
long as
trust, starting a
start
trust is another option.
starting trust and putting shares of your company, in that trust. But again, these are very important to do way ahead of the transaction because if
Yes.
it's too close to the transaction, you will be audited and everything that you've saved, you will pay back with penalties.
Oh my gosh, there's some
And
fun stuff going on, right?
yeah, and there's no downside to doing these things.
Yeah.
Even if you're doing these tax strategies for an exit in the future, if that exit never occurs, there's no harm in doing a,
Right.
a, a lot of these things.
Why, what's the sound of an exit? Anyways, kidding aside, you went through a lot in terms of building a business and ultimately selling a business. Did you have any post-exit regrets? Like, I really wish I didn't sell it at that price, or I wish I left earlier, or I should have. I mean, what was your major like realization? And maybe it wasn't even specific, maybe just general.
It was interesting. My best friend and I, we have a lot of things in common, and one of the many things that we agree on, and he sold multiple businesses as well. We could have dreamed bigger, right?
Oh.
We were very proud of the level that we got our companies to and the transactions that happened, the exits per se. But we look at ourselves like, you know what? We could have gone bigger. Instead
Tell
of
me a
getting
little bit more about that, Stephen. What do you mean by that?
just from a pure revenue perspective, right? In my specific case, we grew to again from nothing, totally bootstrapped without any outside investment to over
Mhm.
$40 million in sales. And looking back at it, I'm like, you know what? If I put and I put together a strategy to exit on, on my terms, which I can get into. I wanted to make sure that I wasn't part of the deal. A lot of founders want to continue working with their company post exit. In my case, it was just time, right? It was
Yeah,
26 years.
you made most of the right decision. Dreaming bigger is one I didn't expect to hear.
Yeah, so looking back at it, could have gone bigger. Could have done a lot of things from a product side, from a development side,
Gosh, what does that
to
say?
go big.
So I've got a couple of founders listening to this. They're in that early stage, maybe 5 million in ARR, maybe 10. What are the things they need to be thinking about short term, maybe a little bit with long term, besides what we've spoken about?
Yeah, I mean, you really have to weigh the risk, right? So, and the risk of, going bigger versus taking chips off the table today. And, sometimes you can do both. If you really want to accomplish both, there's definitely a strategy to be put in place where you can take as many chips as you want off the table. You can find the private financial partner, and let's say a private equity firm that can either do a minority recapitalization or a majority recapitalization, allowing you to take chips off the table to there, kind of de-risking this value that you've built. And then you get to go along for the proverbial second and third bite of the apple when the newly formed company, now private equity backed, continues to grow. So if you want to take 100% of the chips off the table, no, nothing wrong with that.
Yeah.
Or you can take partial chips off the table.
I've been involved in a few deals where private shares have become more liquid through different types of transactions, secondary, right? Secondary
Right.
markets and other opportunities. I think that's spreading besides the CEO level or the board level or the C level on down. I think that's healthy. Do you agree?
Definitely. I mean, any form of liquidity is definitely a good thing, and it helps everybody involved, especially the folks that are participating, in the day-to-day grind. If there's a way for them to achieve some sort of liquidity before that, final, change of control occurs, I'm all for that, and I agree with you. I'm seeing a lot more of that these days.
I mean, I can buy stock in anything except some of them have a pretty high minimum for that not everyone's going to enjoy. Hey,
That's
Stephen,
true.
so you're involved in a lot of exit consulting and some other work. Tell us what else are you up to today?
A lot of exit consulting, working with a lot of entrepreneurs that really don't understand if they're ready or not, or if their company is ready or not for a maximum exit from a valuation perspective. I
Mhm.
really, I've had my eyes opened when I was going through the process as far as what the valuation killers are. And it's really rewarding for me to help open an entrepreneur's eyes into, what some of the possible valuation killers are for individuals. So I work with founders in that capacity. And I'm also really, as we mentioned, I'm huge in endurance sports and building an endurance mindset. So I like to take founders on retreats, whether they be, mountain based with no prior experience necessary, just, entry level mountaineering, where they get to learn some of the concepts of, high altitude climbing. Or triathlon training, which I love to do both. So I love to share the knowledge of both of those types of endeavors and then relate that back to their business. And again, the planning, the preparation, and execution that's involved in all of the above to help them get to wherever they want to bring their company next for the next chapter.
Fantastic, Steve. And tell me, as you're meeting with these founders, with these CEOs, what's the thing that you're most interested in? like interviewing for and not really to hire, but to say, this is somebody who I really think would get it? And then what is it that you don't think is that important?
Yeah, I mean, I really like, and this is a really tough subject to cover with a lot of founders. You know, we're incredibly loyal to folks that have started with us. So
Mhm.
I like to have, sacred cow conversations early on around, leadership team and other folks within the organization, because unfortunately, a lot of again, and this is for a little bit past the starting line. When you're talking about maybe like the 5 to 10 year time frame, there's
Yep.
folks that have been in positions from the get-go that really aren't the best suited to be in those positions moving forward. So those are really hard conversations to have and to get buy-in from. But oh my God, does action against this topic actually move the needle when you get the right professional head of sales, when you get the right professional CFO in place, when you get the right head of product development or customer service in place. These things move the needle tremendously.
Okay. I'm going to bounce over to the lightning round to kind of amplify some of the questions I've asked you, but also just keep it kind of on the short answer time. Because, we joked around our ADD society today, anyways. People like
Sure.
quick answers. But for you, talent or discipline?
Discipline.
Yeah, I think so. It's becoming more common, right? To have the talent. How
Absolutely.
about grow fast or grow right?
Grow grow right 10 times out of 10.
I'll leave that one up. Everest or exit?
Since I've already exited, I want to do Everest again.
That was a whole nother story. We'll talk about that on our next chat. What's harder, mile 20 or finishing due diligence?
Oh boy. Holy cow. Um, The diligence process will be the most complex and nerve-wracking and stressful situation you'll ever find yourself in. So that's and I've been through many mile 20s. Due diligence is harder.
Um, you've got a great book, Built to Finish. What's the other bookend that you would recommend every founder read?
I'm reading a book right now which I really love. It's called Turning Pro, and it has nothing to do with being professional at any given sport, but it's just about leveling up your performance in whatever you may be participating in currently. I really love it. Turning Pro.
All right, I like it. Give me one other one because I know you're a big reader then.
Oh, one of my favorites to recommend is The One Thing. It's one of my favorite books, and I'll summarize it really quickly. What is the
Yeah.
one thing that you can do that'll make everything else either unnecessary or significantly easier? And you can apply that question to anything. Hey, I'm trying to expand into Europe. I'm trying to grow this product line. I'm trying to, increase my profitability. What is the one thing that you can do that'll make everything else unnecessary or a lot easier?
It's also a great line in City Slickers from Billy Crystal. And
Oh, is it?
come on, you don't remember that line?
You know what? I can't believe I've only seen that movie one time.
Okay.
I need to put
First
that
of
on my
all, you're
rewatch
you're you're
list.
a Long Islander. Come on. You've got to
Yes.
go. Okay, so even cheat a little bit. Go to YouTube, City Slickers. I think it was Jack Palance, the famous actor, who gave the line to Billy Crystal, the one
Okay.
thing. And I'll read the book.
Oh, that's fantastic. Now that I know, hey, I'm definitely gonna go watch this, and then I'm gonna play this for a lot of people.
You're gonna love it. Okay, so listen, most founders build to grow, the elite build to finish. Discipline isn't sexy, systems aren't flashy, endurance wins in sports and business. That's my way of
And
saying, Stephen, thank you for showing us how to build companies and lives that finish strong.
thank you, Keith. You summarized it perfectly. Amen.
Amen. Great chat.